Welcome back to the 18th episode of the $10,000 SOXL challenge. I'm continuing to trade SOXL with a $10,000 initial principal, using multiple intraday quantitative strategies to track the account's compounded performance. Today serves as an excellent case study for us to explore how a trading system, through multi-layered analysis, maintains discipline when the market sends tentative signals. Today, our trading system once again issued a wait signal. To understand the profound logic behind this decision, we must dive deep into every core piece of data from today's session. First, let's look at the four most critical prices. SOXL opened today at $25.66, hit an intraday high of $25.79, a low of $24.95, and ultimately closed at $25.62. This dataset immediately reveals the first core characteristic of today's market: extreme narrow consolidation. The mere 84 cents range between the day's high and low is exceptionally rare for a high volatility ETF like SOXL. Simultaneously, the near identical open, $25.66, and close, $25.62, formed a classic doji, or small-bodied candle on the chart, a textbook signal that bullish and bearish forces have reached absolute equilibrium, leading to extreme indecision and a wait-and-see attitude. Next, we examine the second key data point: volume. SOXL's total volume today was approximately 76.5 million shares. This number, when compared to the 100+ million shares traded in each of the past 2 days, shows a significant contraction. In technical analysis, when price volatility tightens and volume shrinks concurrently, it sends an unequivocal signal. The market's major players have chosen to stand down. There are no new buyers willing to chase prices higher, nor are there panicked sellers driving them lower. The entire market has entered a state of suspended animation, awaiting a catalyst. So, can this narrow range, low volume structure provide clues about future market direction? The answer is yes, but the signal it provides is neutral. This extreme calm is often the precursor to a storm. The market is like a spring being compressed. Energy is building, but whether it will ultimately break to the upside or downside is impossible to predict. And this is precisely where the core value of our waiting strategy lies. The purpose of our Bollinger Band system is not to predict the unpredictable direction, but rather to identify this low probability, high risk, spring compression phase and decisively choose to stay on the sidelines. Today, the system once again executed its mission flawlessly. It told us that on a battlefield with no clear direction and where the main forces are in a truce, the best strategy is to stay in the trenches, clean your weapons, conserve your ammunition, and wait for the high certainty signal truly worth our full commitment. Downward trend day 18 performance summary. Total trades, 0. Win rate, N8. Total profit, loss, $0. Daily return, 0%. New account balance, $10,231.67. All P&L, profit and loss calculations in this series exclude trading commissions to keep the focus purely on strategy performance. Brain trading reflection. All of our backtesting and strategy refinement are built upon the professional-grade data provided by Barchart. Today's session is a perfect case study in disciplined inaction. After consecutive quiet trading days, it's easy to get antsy, and it is at this very moment that a systematic trader needs to trust the system most. Our decision to stay flat was supported by two key layers of our process. Primary system, Bollinger Bands. Although the Bollinger Bands expanded slightly, their width remained far below the threshold required for a high probability trade signal. The system correctly indicated that the market's energy was still too low to support a momentum-based entry. Mean reversion strategy, VIX, QQQ, our secondary strategy, which looks for signs of extreme market panic or euphoria via the VIX, also saw no reason to act. The VIX remained stable, providing no overbought signal to justify a counter-trend trade in QQQ. When both your primary momentum system and your secondary mean reversion system agree on patience, the decision becomes simple. This isn't magic, it's the logical output of a well-designed process. Our discipline today ensures that we have our full capital ready for when a true, high-quality opportunity finally emerges. Have you ever been tempted to jump into a trade just because you were bored? How do you maintain discipline during a series of quiet days? Share your experience in the comments. If you want to follow this journey day by day, through the wins and the losses, make sure to subscribe and hit the bell icon so you don't miss the next update.